Hello everyone, my name is Jonathan Ralph. Welcome back to my channel, which is where we talk about how to get a second passport in the best possible way for you and your family. Today we're talking about what is still the #1 route to a European citizenship for international investors, and that is the Portuguese Golden Visa. Now, this allows you to get a European passport in exchange for making an investment into a qualifying investment fund and then holding that investment for a minimum period of 5 years, among a couple of other requirements. If you're new here, welcome. I'm a qualified wealth manager by trade, so I'm very well placed to talk about international investment funds, and I'm very proud to say that my team is now the #1 Golden Visa agency in Portugal working today with a 100% track record of success and a 5-star rating on Trustpilot. Feel free to read more about us over there. But enough about me and my team, let's get straight to it because there's an awful lot that I would like to cover in today's video. Now, this is a specialist deeper dive into the area of Portugal Golden Visa investment funds. This can be quite a confusing landscape, so the aim of today's video is to explain the different types of funds that are available, and there are many, and break down the risks and benefits involved so that you can make an informed decision when selecting the best route for you and your family. This content, in my opinion, is essential viewing for anyone looking at a Portuguese Golden Visa, so I do hope you'll find it helpful. First things first, how shall we approach the topic today? Well, we'll begin by giving a quick recap on what the Portuguese Golden Visa is for those who aren't yet fully up to speed. We've covered this in previous videos, so I'll try and keep this to a 60-second summary on what it is and what the current rules are for 2024. We'll then look at investment funds in Portugal and why this is now the standout route to the Golden Visa. We'll also look at some trend analysis from the past few years to understand the context and also the track record in this sector. We'll then get into the real meat of today's session by breaking down the different types of Golden Visa investment fund that exist in Portugal today. This has, of course, changed somewhat since the law was changed in the back end of 2023. We'll then look at the key factors that you should be bearing in mind when understanding the viability of a fund. That means looking at the various investment sectors involved and also the costs, risks, and benefits that may be available depending on the fund selected. Next, we'll dive into what is actually one of my favorite topics in the world, and that's risk. Yes, I am that boring, unfortunately. Now, risk is not a simple topic, but it is one that you must understand before taking on any significant investment, such as the Portugal Golden Visa Investment Fund. So, the first thing that we'll do is walk through what risk actually means and the different types of risk that should be understood and assessed when taking an investment decision. I'll then also cover the core strategies to mitigate each different type of risk. Now, don't worry, this is really not rocket science, and I'll try to explain this in as simple terms as we can possibly do. We'll then wrap up for today by looking at the different options that exist in the market and how to take the most sensible first steps towards that coveted European passport. A quick intro to the Portuguese Golden Visa then, and I promise to keep this down to 60 seconds if I could, so feel free to get the stopwatch out now. Okay, so the Golden Visa was launched in 2012 and has proven extremely popular since then as it remains the most accessible route to a European passport. It's an investment visa wherein you receive a residence permit to Portugal in return for an investment of a minimum of 500,000 euros into the country. Then, after 5 years and by visiting the country for an average of 7 days per year during that time, you can qualify for full citizenship and a second passport, which will then give you permanent residence rights across the entire European Union. The Golden Visa has attracted over 10,000 applications since inception, which actually equates to just under 30,000 people, and just under 3,000 Golden Visas were issued in 2023. And the annual case numbers are increasing pretty much every year, and that's a trend that is set to continue. You can include the whole family, but you must all have a clean criminal record. This is actually a proven and legally viable way to citizenship, even without living in Portugal, and citizenships are now being granted to Golden Visa holders that meet the requirements for citizenship. You'll be interested to know that my team here has managed over 10% of all the Portuguese Golden Visas ever issued. So if you do decide to work with us, you can rest assured that you'll be working with a tried and trusted expert and a proven market leader. Okay, then quick recap on the rules that are in effect as of October 2023 and now extending into 2024. What's changed? Well, real estate does not qualify for the Golden Visa. It, of course, used to, but that is no longer the case. The capital transfer route has now also gone, but that does leave us with 3 viable routes into the Golden Visa. So what are they? Number 1, a €500,000 investment into a qualifying fund, a €250,000 donation to culture and the arts, or the creation of a business in Portugal that employs at least 10 people. Now, the donation route typically means that you don't get the capital back. You don't need to be a wealth manager to know that that would not be the most sensible financial decision. And employing a team of 10 people, of course, comes with a high degree of risk and expense. So therefore, it's quite easy to see why the investment fund route is now the number 1 way to go. That being said, there are a couple of criteria if the fund is to qualify for the Golden Visa. Now, namely, it must not invest in real estate and it must be regulated by the Portuguese Securities and Markets Commission. In addition, at least 60% of the underlying investments must be Portuguese. And there we go. So pretty simple stuff. Okay, real estate no longer qualifies and the investment fund route is now the go-to for 2024. So bearing that in mind, I found this graphic to be rather interesting and thought I'd share it with you today. Now, this is originally from our friends and partners at Investment Migration Insider, which is actually a fantastic resource if you're looking for industry news away from this channel. And of course, don't worry, I won't be offended at all. And this graphic shows the consistent rise of the Golden Visa investment fund over the last few years, even when real estate was permitted under Golden Visa legislation. It could therefore be argued that a move towards Golden Visa funds was actually where the industry was headed before these new rules were brought in. It's kind of a moot point at this stage, but I did think it was an interesting trend to highlight to you today. So investment funds were already gaining in popularity even before they became the de facto go-to solution for Golden Visa investors. So then, let's understand them a little bit more. Firstly, by looking at the different types of funds that exist. Now, I prefer to break these down into 3 specific types. Now, this is just my own personal denominations, but I like to separate them out into classic investment funds, sector-specific funds, and alternative funds. Now, by classic, I mean your typical mutual fund style approach. This could be a fund that invests in stocks and bonds, or another type of mixed asset portfolio, or one that invests 100% into the stock market. Hedge funds are also an option, which are essentially a more aggressive take on a classic fund. Think higher costs, greater risk, but also the potential for higher returns. Now, what's good about these classic fund styles are that you do get good levels of diversification within a structure that is somewhat easy to understand if you've done some investing before. That being said, these funds do tend to carry the highest cost in the Golden Visa market, and the investment approach may be somewhat intransparent, and you could be exposed to quite a lot of volatility as well as the value of your investment rises and falls. Now, this fund type is certainly not for everyone. The second type are sector-specific funds. Now, these are funds that specialize in investments into a certain activity. For example, the energy sector, technology, or even hospitality. Hospitality funds, now why do they have little asterisks around the word hospitality there? They're actually my personal favorite for the majority of Golden Visa investors, and I'll explain why in just a second. For now though, sector-specific funds are usually leaner than classic funds and more flexible than them as well, largely because they're investing in fewer options, and the fund manager often has far greater influence in strategic decision-making in the underlying businesses. This influence can often mean that investors get access to far more favourable investment cases than is otherwise the case with a more classic fund. The flip side of this is that because we are not typically investing in quite as many different positions as a classic fund, we are, of course, less diversified. And lastly, alternative investment funds. The most common in Portugal are actually sustainable projects, farming projects, or education funds. And these, what they do is they allow you to invest in a cause that you care about. But the underlying financial case is usually somewhat weaker. It's also a very niche investment. So this is only really appropriate to your financial plan if you already have a very high net worth and therefore can afford to allocate 500,000 euros in such a way. Now, just briefly, I mentioned that my preferred fund choice are sector-specific hospitality funds for the vast majority of investors. Now, I'd like to just tell you why that is. So feel free to disagree, of course, but number one is track record and relevance. What I mean by this, Portugal has a very well-established and robust hospitality sector, which is actually responsible for around 16% of the country's gross domestic product, GDP, and that stands at around 40 billion euros per year. Considering that we need to invest in a fund that invests in at least 60% Portuguese securities, you are therefore better off investing into sectors where the country excels. And hospitality is a great example of this. The next reason why I like hospitality, reliability. An interesting fact about the hospitality sector is that it relies on both foreign and domestic demand, which insulates it from shocks and therefore makes it a dependable sector if things ever get rocky with the Portuguese economy. Hospitality has also shown itself to be very resilient in hard economic times, as holidays have proven to be one of the last things that people will give up on when money becomes tight. That's great news for investors into the sector. And number three, predictable cash flow models. It's very easy to project and chart hotel performance, which in turn means that some operators could offer investment yields to be paid up front. Now, this is wonderful news for investors as it passes a significant amount of the investment risk onto the hotel itself. Now, this is something that my team and I work to achieve for our clients just about wherever we can. And lastly, fringe benefits. So many hospitality funds offer additional benefits to the investor, such as free vacations in the hotels that are being invested in. This can allow investors to meet the 7-day per year physical stay requirement for citizenship in style and with a minimum of fuss. Again, great for all concerned. Moving on now, and not to sound like the Doomsday Brigade here, but a few more points of order when talking about investment funds. Now, investment funds are inherently more complicated and more difficult to understand than real estate investments, for example, which means that it can be a little bit more daunting to actually take a decision on which fund is right for you, if any. So here are some key questions that I would like you to ask yourself when selecting your fund investment for the Portugal Golden Visa. Firstly, what does the fund invest into? Do I like this industry? Is it ethical? Do I get a good feeling by placing my hard-earned money into this sector? And perhaps even more importantly than that, do I believe in this sector? Does it have a bright future? Okay, if you're happy with the philosophy and the outlook of the industry that you're investing into, we can then go on to the next issue, costs. Now, this is a very, very important point. A very big consideration that can actually dramatically influence your investment experience. And Golden Visa investment funds in particular can be on the expensive side if you don't know what to look for. Many of these funds levy high entry fees that will eat into your capital from the outset, then exit fees when you do eventually exit the fund, annual management fees, and then just to add insult to injury, performance fees when the fund manager actually does their job correctly and gets you a return. In some cases, this performance fee can be as high as 50%, and I've actually seen instances of performance fees up to 100%, which would mean that you wouldn't even see 1 cent of any outperformance. Now, to me, that is absolutely crazy, but anyway, that's by the by. All of this does tend to add up fairly quickly. So that's one of the reasons that we don't do that with our funds here at Holborn, but do make sure that you understand all the costs involved before you commit to any particular fund. Next consideration is the structure of the returns that you can expect. Now, this can also tell us a fair amount about the risk level of a fund too. So are returns guaranteed? Are they even paid up front? If yes on either or both of those questions, this is a good indicator of the confidence of the fund manager to deliver on their promises. If not, then chances are that you may actually be in for a bit of a bumpier ride. So make sure that the investment is in line with your attitude to risk in all circumstances. Now, it goes without saying that past performance data is no guarantee of future returns, but it is helpful because it can give you some insight as to the credibility of your investment partner. So do factor it into the equation. Next, lock-in periods are also key. Why? Well, many Golden Visa investment funds require you to stay invested for a period that may be up to 10 years, which means that you cannot access the capital easily once you have the citizenship and the second passport in hand. Now, this can force you to make some pretty major lifestyle decisions or adjustments if a significant amount of your capital is tied up for an excessive amount of time, which can be quite frustrating and downright infuriating. So please be mindful of this point. And as always, if you're unsure at any point, simply ask the fund manager for further clarification. And speaking of the fund manager, it's always good practice to perform your own due diligence on the people behind any investment that you make. So not all fund managers are created equal, of course. It's just like any profession in the world. There are good ones and there are less talented ones. So looking into their past performance data is always a good idea. And lastly, what is my security? With most fund investments, your capital is 100% at risk. Some funds will offer capital protections or guarantees that minimize your risk, but you do usually end up paying for this through the structure of the fund and performance fees. So if capital protection is important to you, then it's critical that you understand what would happen to your money in a worst case scenario. Could you lose it, or are you protected? We'll come on to this point again in a few moments because now is probably the best time to address what is probably the main consideration when making any kind of investment, and that is the exciting topic of risk. Okay then, so the first step, in my opinion, to mastering any topic is first to understand it. Now, I'm assuming that everyone watching this video is familiar with the general concept of risk, but when it comes to this particular context, we can loosely define it as the likelihood of incurring some kind of loss during an investment journey. Now, risk is quite a lot more nuanced than that, but that loose definition will do for now, at least for the purposes of this video. When investing in a Golden Visa investment fund, generally speaking, there are 6 types of risk factor that you should assess before making a decision. Now, I've placed these on your screen here. These are performance risk, concentration risk, management risk, credit risk, counterparty risk, and the risk associated with the costs of your investment. And that's also known as the hurdle rate. Now, let's spend a few moments to just define these together quickly. Firstly, performance risk. Now, this is the classic risk that might spring to mind when you first think of the stock market, for example. Now, the value of any investment can always go down as well as up. And this is the risk of investing in something at one price point and then having to sell at potentially a lower price in the future because it hasn't performed, hence the name performance risk. Next, concentration risk. And this is the effect of having all of your eggs in one basket. Now, let's take a crude example here. Let's say that you were to invest all of your money into Granny Smith apples. Now, that's, of course, not a smart decision, not only because apples go bad, but also because the smallest fluctuation in the value of Granny Smiths will have a huge impact on your net worth as a whole. So you might choose to split your money across not just Granny Smith, but also Bramley apples, Pink Lady apples, Royal Gala apples. Now, that's better, but of course, we're still exposed to the apple market in a disproportionate way. So, true diversification would Invest your money across, let's say, apples, oranges, dairy produce, utilities, the banking sector, and any number of unrelated industries and asset classes, so that when something happens to the apple market, your net worth is not hit as hard. That's the general concept of diversification. And it's worth noting that diversification is good for mitigating this type of risk, but the flip side of that is that it can also limit your upside, the potential for returns. Next is management risk. Now, this is quite an easy one. It's quite simply, can I trust my fund manager to manage my money responsibly? Is he or she competent? Next, credit risk. So, this is essentially the risk of your returns not being paid out by the company that is managing the investment for you. Think about an example of a bank going bust. Now, they would have your money on account and, of course, the interest, but they might not be able to pay you out. That's credit risk. Next, counterparty risk. Now, this is where essentially we need to ask the question, will the company that I'm investing into still be around, still be trading when I need to exit my position? Let's say I'm investing into a hotel project, for example, for a term of 5 years, in line with the holding period for citizenship. And I want to be sure that the hotel is still operational when I exit that investment so that I can recover my funds as soon as I get my citizenship. And lastly, hurdle rate. Now, strictly speaking, hurdle rate isn't technically a risk factor, but it is a consideration when making an investment decision. The hurdle rate, as I alluded to at the start of this particular slide, that's the rate of growth that you need to see in order to break even on your investment. So basically, the higher the cost, the higher the hurdle that your investment needs to jump over to deliver a profit. So if the cost is 2% per year, then the investment needs to grow by at least 2% per year to deliver you a return. And then above that, we're clearing the hurdle and delivering a profit. Okay then, so how do we actually mitigate these risk factors? Well, let's look at performance risk first, and this is quite a straightforward one. Quite simply, we should be looking to invest in quality, established businesses with good track records and proven models in proven sectors. As I mentioned previously, past performance does not guarantee a future return, but it does help to give an indication of the level of risk that we're taking on. Next, concentration risk. Also quite straightforward. So if this is of concern to you, then quite simply look to diversify your position. Make sure that you are not committing too much of your net worth to one particular investment asset if concentration risk is something that would keep you awake at night. Now, the best way to do this is to speak to a trusted advisor that can construct your portfolio in a smart way, or perform a look-through analysis on a potential investment fund before you commit to it to make sure it's right for you. Next, management risk. Again, not teaching you to suck eggs here, but you should be looking to perform due diligence checks on any fund manager before you commit to working with them. You want to be sure that you're dealing with trustworthy people like you would with any business deal. All common sense so far, right? Well, next, credit risk. This is a little bit more interesting. This is where I would personally recommend looking for investments that can offer the potential of an upfront return so that you are paid before the investment journey. Now, not only does this eliminate the credit risk, but it's also a good indicator that you're investing into a solvent quality project. Counterparty risk. Now, this can be eliminated again through good due diligence on the fund manager and the projects that you are investing into. And hurdle rate, straightforward once again. This can be reduced by prioritizing low or zero cost investments, and yes, they do exist. So, in summary, invest in quality, diversify where appropriate, do your homework on the people involved, and prioritize low-cost investments that offer the possibility of upfront returns where possible. Now, if you do these things, then you should be in a far better position than most Golden Visa investors. Okay, so now we know what we should be looking for in investment. So let's touch on the current state of play in the Golden Visa investment fund market. Now, as of right now, there are just under let's say around 50 eligible funds for the Golden Visa. Now, these options vary hugely in terms of quality, cost, investment philosophy, capital tie-in periods, performance history, even their tax treatment, depending on where you're actually fiscally resident as an investor. Now, basically everything that we were mentioning up to now, although we didn't mention the tax topic, in fact, that's a subject that is better kept for a one-to-one suitability meeting where we would look at the best options for your individual situation. Let's not go into that in such a public and general information video. Now, I'm afraid that EU securities regulations dictate that I cannot share specific fund information or potential options with you in this particular video. We would need to get together in a private meeting to discuss those options instead. So there's a booking link down below this video in the description box if you would like to do that. But of course, if I'm not your cup of tea, that's totally fine. But I do recommend that you speak to a trusted advisor of some repute as a part of this process. Taking the right investment decision for your own individual circumstances, quite frankly, can be the difference between a great experience and a long-term headache. So I really can't understate the importance of getting good advice here. Fortunately, though, good advice is usually free, or rather, I should say, advice on fund selection is usually free, and it is in our case. And that's because any Golden Visa agent that is worth his or her salt will offer this as a complimentary part of the wider onboarding process for your Golden Visa. Okay, then speaking just quickly about Golden Visa advisors that you can trust, about Golden Visa handling agents, well, let me quickly introduce who we are to you in case you aren't already familiar with myself and the company that I work with. Now, I'm a partner at Holborn Assets, which is one of the largest expat wealth management firms operating worldwide. We've been going for 25 years now. We're currently the #1 Golden Visa agent in Portugal, as I mentioned at the top of the show today. Our team has processed over 1,000 cases now with a 100% track record of success. We're rated 4.8 out of 5 on Trustpilot on the basis of more than 2,000 reviews now. So feel free to head over to our Trustpilot page, read more about us if you're curious to know more. We're not just Golden Visa agents, of course, and our wealth management business looks after more than 20,000 clients around the world. Now, interestingly, our size and relevance in the market means that we can access exclusive investment funds with certain fund managers that you will not find anywhere else. It also means that we can negotiate preferential terms for our clients with others. So, you may be somewhat surprised as to just what we can achieve for you. So I do recommend getting in touch to explore. And of course, that would be on a no obligation basis. Now, you can book a meeting with me directly by scanning the QR code that's on your screen there, or by clicking the link that's in the description box down below this video, which will take you directly into my calendar, and you can select the best time to speak according to your own schedule. As I say, we have access to unique investments that you won't find elsewhere, some of which we have actually designed to be the best in the market. So it's very likely that a conversation would be worth your time. But that's enough of a sales pitch from me. Of course, you can always drop me an email for any questions. I'm always happy to help where I can. So feel free to get in touch via jonathan.ralph@holbornassets.com. You'll see that on the bottom of your screen there. And I'm happy to help in whatever way that I can. Now, if you're not quite ready to book in a call just yet, of course, totally fine. In that case, you may want to check out this video after wrapping up this particular session. Now, in this video, which I will link to in the top right-hand corner of your screen there, and also at the end of this video, I will cover everything else that you'll need to know about the Portuguese Golden Visa. This session will be essential background information before getting started, away from the more specialized investment piece that we're currently covering in today's session. Well, as I just mentioned, as today's video is focusing purely on the investment piece, I would suggest that you complete your knowledge base by taking a look at this video when you can. Like I say, the link to that is in the top right-hand corner of your screen now. Click there to be taken to that video. And that's all from me for today. So I hope that this has helped you to understand the key factors that should be considered when taking a decision on which investment fund to choose for the Portuguese Golden Visa. I've left my contact information up on the screen there if you need it. So jonathan.ralph@holbornassets.com is my email address. And also the QR code for booking a meeting. Remember that booking link is also available in the description box down below this video. So then, thank you for taking the time, as always, to watch today's video. And don't forget to like and subscribe for future updates on all things second citizenships and golden visas. If you do subscribe to this channel, then you will be first in line to receive my updates as I publish them. I try to publish updates fairly regularly, as this is a fast-moving space, and we like to be ahead of the curve here. Looking forward to seeing you either in a one-to-one session or in a future video. But in the meantime, I wish you a wonderful day ahead, wherever you are in the world. Take care, and bye for now.